Number 26 ist das Girokonto für dein.
It takes just a few minutes and a mobile phone to open an account at N26. This Berlin-based digital startup bank is one of a number of so-called fintechs, offering only a limited number of financial products, but doing so, they believe, better than their much larger competitors.
Because we are still a small startup, very well financed, we can actually have much lower overhead. We have much better IT systems in the background, and therefore we can offer a much better service at a much fairer price, but also much more sustainable.
Than, say, Deutsche Bank, a global financial giant teetering, it appears, near the brink. Most recently due to a possible multi-billion-dollar settlement demand from a US lawsuit. But in Washington last week, the IMF said that ultimately the size of its investment arm was the problem.
Investment banks that are in transition away from dated business models that relied heavily on large-scale balance sheets. And Deutsche Bank, we can say, is in the midst of this latest challenge.
A challenge that extends across many other parts of the sector and complicated by other factors.
They're in a vicious circle at the moment because they've been saved by printing enormous amounts of money and by lowering interest rates. And these lower interest rates are destroying the basic business of the banks, which is lending. And Germany, the Deutsche Bank, for example, is the biggest lender in Germany. And the biggest lender in Germany can't make any money by lending, by handing out loans anymore.
Being as big as it is may yet help Deutsche, of course. There's talk of a private sector bailout, if needed, from companies who fear the potential fallout from a meltdown at Germany's largest lender. But here at the German Chancellery, there's been far less willingness to intervene. Berlin believes poor-performing banks in other parts of Europe should suffer the consequences, so stepping in to help Deutsche might look hypocritical.
They try to be active in many different fields because the point was to be very big, to be too big to fail. That's a big advantage because it means the state will save you. And because everybody knows this, you don't have to pay the full interest rate you normally would have to pay. And that's a great advantage on the financial side. Today this doesn't work very well anymore because the states are less willing to pay.
Still, even the sector's disruptors say that if the biggest banks fail, the smallest suffer too. Guy Henderson, CCTV, Berlin.